cotton's down. That means you should have some more money. So let's continue going. We got wheat futures up. Man, wheat is up $21.75. That's a percentage decrease of 3.06%. Now, did anybody see the sugar spike today? I know we saw a modest sell-off yesterday, but did anybody see sugar today? I mean, good God, if you're holding any equities where sugar is a main component of their product, this is going to definitely affect the bottom line of your stocks. So be watching your stocks here within the next quarter or two, because this is going to affect them. Now, let me tell you something right now. Sugar is up 5.43% on the day today. 5.43% on the day. That's an increase of $1.57. I mean, let me tell you something. We've just been seeing a spike. If you take a chart look on sugar, we have just seen a dramatic increase. Now, I know that everybody's sitting here saying, well, how exactly is that possible? I mean, why are we seeing an increase in sugar, Ghost? Well, I'll tell you why. The reason is because it's a hot summer, baby. I mean, have you seen this heat wave across America? Everybody's going to the ice creams and, what would you do for a Klondike bar? You know, that kind of crap. They're going to popsicles. They're going to the shaved ice. You know, they're going for these types of crap, all right? And I think that the increase in that kind of a commodity is, is being reflected at the sugar futures level here as an investor. And I think that if you own any stocks in any, let's say, I don't know, maybe candy manufacturers or anybody where there's sugar as a main component of their product, you may want to take a step back and analyze whether or not it's good to possibly liquidate some or all of those particular assets based upon the analysis of this sugar spike that we are seeing today, and not only today, but this whole entire summer. But it's short term, of course, short term. Anyway, let me move on, folks. I'm just giving you some analysis here. Let's see. We got soybean futures up $11.25. Lumber continues to see its increases. It is up $5.50. That's a percentage increase of 2.08% on the day. Oat futures are up $8.25. That's a percentage increase of 2.33%. Haven't you noticed that most of these commodities are going up? Haven't you noticed that? Now, this reflects the traditional investor mindset. When you see equities markets down, commodities should be up. This is the way it always has been. But ever since the government started intervening with the market and started trying to manipulate the market with taxpayer dollars and with strategic petroleum oil reserves, this is what you have out here. But let's continue going, shall we? Soybean oil futures are up 6 cents, and wool, I guess we saw some bull-nosed bull dykes come out today in the wool futures because they are up $2, and that's a modest increase. Now, let's take a look at the metals, okay? Because metals should reflect a negative equities market. If you see a negative equities market, traditionally you see an increase in the metals market, and that's exactly what we're seeing today. All right, we look at copper. Copper is up $1.85. That's a percentage increase of 0.42% on the day. We take a look at gold. Oh, man. I mean, this is why I keep saying, folks, I mean, I was back in the day telling people, hey, it's time for people to start accumulating metals, whether it's through some method of owning shares of gold through ETFs or gold mining companies, or silver, mind you. Silver is also a great metal commodity, in my personal opinion. All right? You start investing in these types of things, you're going to see the reflection of these increases on those stocks or financial instruments. Or moreover, I mean, I have always suggested for individuals to go in, and I know people think that they're above this because you're going to have to be around a certain element of people that, hey, I'll be honest with you, I don't want to be around that element of people either, right? I don't blame you. But I have always suggested that individuals go into a pawn store, and I know that people are like, what? A pawn store? Are you kidding me? You're damn right, a goddamn pawn store, because let me tell you, you go in there, make sure you have at least about, a couple of $100, $200, $300 on your person, all right, cash. Don't put it on a credit card because, they don't like credit cards. Old pawn shops, they don't like that crap. As a matter of fact, when you put cash on a pawn shop's face, they start salivating, and then you have some leverage to possibly talk down the price of the item in question. But you go to a pawn shop, and just start grabbing some of this cheap gold, some of the cheap silver that they have there on display. And always remember that a pawn shop can go down on its price. You know, unlike going to some of these traditional jewelers out here, you can accumulate a good fat chunk of silver, a good fat chunk of gold, and this is just to hedge your liquidity against any type of inflation. Or hop on some of this gold wave and some of this gold silver spike that we're seeing out here. All right? Now, I'm not saying that you need to put all your money in anything, because I think that you have to be well diversified to have the stock market beat. You have to be well diversified as an investor, but to entertain an option of putting a certain percentage of your portfolio in physical gold is definitely something that, I would advise, and any investor I would think that has any kind of sense would advise. And let me tell you something, it's not too late. I think that we're going to continue to see increases. We're already seeing out of the Federal Reserve that they are entertaining the idea of implementing QE3. QE3, folks, quantitative easing 3. For all you folks that don't know what that means, it's just an economic fancy way of saying that they're going to print more money. And, of course, we talk about how monetary policy works, how countries raise money, how they're able to print money without necessarily going completely depleting the actual integrity of the currency. But what's going to happen here in QE3 is instead of selling bonds, the Federal Reserve is going to buy back bonds, which will increase the amount of money that, or increase the yields, I should say, of the bonds that will in turn allow the American government leverage to sell more bonds so that they can increase their monetary outstanding currency notes. It's a very complicated process, and in essence, it just means that they're going to go out and they're going to print more money, and as a result, just by default, gold is going to go up, silver is going to go up, commodities are going to go up, equities are going to go up, and it's just by default, man, because the currency is worth less, all right? When you make currency, when you get paid a paycheck, the first thing you should do is put it in some kind of an instrument so that your currency, as it gets more and more depleted, it'll be safe. Put it in some artwork. Put it in some gold. Put it in wine. I always said that wine is another great investment. I know you idiots are like, what? Wine? Are you kidding me? Have you seen the amount of wine snobs that are out here? I mean, I'm out here in Austin, Texas, for Christ's sake, where idiots are buying $2,000 bottles of wine out here like it's no big deal out here downtown on Congress Street. I mean, it's not a big deal, but what I'm saying is you put a $200 bottle of wine, you put it in the proper environmental settings to keep the integrity and the preserving and peaking process of that wine intact. You can actually parlay that $200 that you pay today in wine and sell it whenever it peaks, whether it's 5 years, 8 years, 10 years. And let me tell you something, you can actually sell that son of a bitch for $700 or $800, $900. And it also depends on the market, all right? It also depends on the market. I mean, that could be a very popular wine. That could be a very popular year. So, supply and demand will also increase the value of that particular wine. But that's what I'm saying, folks. This is how you got to do it. That's all there is. And I love being a capitalist. I love being a capitalist, making money. You know what I'm saying? Making money. That's what I do, That's what I do, for Christ's sake. Anyway, gold is up $19.50. That's a percentage increase of 1.26%, closing out today at $1,568.70 per troy ounce of gold. We've got silver up 43 cents. That's a percentage increase of 1.21%, closing out today at $36.13 per troy ounce of silver. Livestock is down today because we figure, hey, we're seeing some woozy uncertainty, I think we're seeing some woozy uncertainty out here in the market, so I don't think that we're going to have an increase of T-bone steak buyers, with the exception of yours truly, anytime soon. So we saw some sell-offs. Live cattle is down 45 cents. That's a percentage decrease of 0.37%. We've got cattle feeder. It is down $1.25. That's a percentage decrease of 0.87%. And for all you ass clowns that like to shove a couple of ham bones down your gullet, Lean hog futures are down 25 cents, and that, my friends, is the markets for your ass. Let me tell you something, baby. I love being a capitalist. I'm drinking some cognac. You know what I mean? The drink that's drank by true capitalists out here. As a matter of fact, I wish I could smoke a cigar in this office building here, but unfortunately, we've got a whole bunch of leftist little pansy-ass pricks out here in Austin, Texas that actually outlawed indoor smoking of public places out here in Austin, Texas. Yeah, I know, it's really pathetic. It's really stupid, but we can't do it. I mean, we can't go out and, go, if you're in a public building, you can't smoke a cigar. You know, you got to go, on one of them rooftop bars, as you saw in one of the videos I posted on YouTube. I like going to rooftop bars. You can smoke a cigar there, a nice good one, on Opus X, some VSG, Arturo Fuente, you know what I'm saying? I like a little bit of Davidoff, Sometimes I like going down to 6th Street to Babalu's, which, this man hand rolls them himself. I mean, I'm a connoisseur, baby. I love all things, I mean, that's what living life is about, in my opinion. If you want to be a capitalist, that's what you should be appreciating. You should be appreciating, things like, sipping the fine champagnes and understanding the nuances on your palate. You understand? Drinking the best scotches, $300, $400 bottles. You know what I'm saying? I mean, going out there and just doing the best things in life. That's what I'm talking about. But also, you have to be fiscally responsible, baby. All right? You got to live within your means because, look, remember, in 2008, all them ass clowns were trying to live lavish, and it all came to a header when they all lost their jobs and the economic meltdown of 2008 happened and people foreclosed on their home. I mean, this is what happened. People living too lavish, not being fiscally irresponsible. That's what put us in this mess. So when you're living lavish, be fiscally responsible, baby. You understand? Anyway, cheers to everybody out there. I'm sipping on cognac. Cheers to all the true capitalists that are listening to me throughout the world. And before we get into anything else and take your calls, please retweet the broadcast. Retweet the broadcast right now. And as a matter of fact, go to the social networks, go to the forums, go to the blogs, spread it around like wildfire, and let everybody know that we're in effect in the house. There's all kinds of little buttons underneath the player there. You see those little buttons? Use and abuse those buttons, baby. All right, there's a Facebook like button, the tweet this button, there's a share this button. You understand what I'm saying? Use and abuse those buttons. It's just a freaking click, for Christ's sake. It's just a freaking click. Anyway, folks, I'm sorry we took so long in this discussion of the economic situation of the current market situation. So, but you have to understand, this is a business show. I've got capitalists throughout the world that listen to me for my market analysis. You understand what I'm saying? I mean, I'm living lavish. I'm the prognosticator of prognosticator, for Christ's sake. You understand? Anyway, we talked a little bit about the Federal Reserve releasing their minutes, talking about how quantitative easing 3 rumors are in effect, and if that happens, well, my stock portfolio is going to take an increase, maybe by default. Woo! Let me take a sip of this cognac. Oh, yeah, that's good stuff right there. But I want to talk a little bit about President Obama's debt ceiling talks, because remember, this is supposed to be President Obama's defining moment on whether or not he can actually lead the country and save it from, political infighting from a potential economic disaster. All he's got to do is go and convince these stupid idiot Republican teabagger, whatever you want to call these idiots, that, hey, look, man. I mean, we have to understand something here, baby. I understand that you want to cut entitlements, baby. I understand that you want to cut this and that, baby. But we're going to have to cut Social Security, baby. We're going to have to cut this, cut that. And you see, Bohner needs to, not be as pompous and use the media to direct his frustration at President Obama's obstinate perspective of raising taxes, because that's also what's prohibiting the right from obliging any kind of a deal. Bohner, John Bohner, he's out there, President Obama is out there, he's trying to raise taxes on people. He's trying to raise taxes on people when